Hey guys, what's up? How you doing? Thanks for being here today. I really appreciate it. All right, so it's 2:37. Market's still open. I usually start with the market, but I wanted to. The market's probably not moving. I was going to look at the market real quick. If the market's not moving, and it isn't, it's bullish. I mean, it's kind of grinding up towards the top of its range. It's good news, but nothing that needs my immediate attention, in my opinion. Jackson, what's going on, buddy? You got food in the bowl. You got food over there, Jackson. I gave you food and I gave you water. All right. All right. I'm going to open a Coke. Anyway, but I had a question in Discord from a viewer or a friend of the station, and not a viewer. And it was about, I think it has to do with the setup of my 3-leg risk reversal. I'm always talking about, I go out to the market maker expected move, and out there I buy a call. How do I know where that is? What am I even talking about? It doesn't show the market maker expected move on option strat. Am I BSing? I mean, that's not really what he asked, but I mean, it's kind of, that's kind of what's going through my mind. So let me show you what I'm doing, what I'm trying to do. And then we can even look in the back tester, and I'll show you why I'm trying to do it that way. All right. Anyway, but thank you guys for joining. Jax is just, he's looking for something to tear up. All right. So MongoDB was going to be our first example. That's why it's up here. Okay, so we can look at Tasty Trade. I love Tasty Trade. Tasty Trade's a million times better than Option Strat any day of the week, any measure. But you can't point and click and instantly share it where it paper trades it and let other people. It's just the shariness, the social aspect is the only reason I do the trades. I found them very close on Option Strat. Option Strat is pretty realistic. In fact, Option Strat gives you bad fills, and I have it give me bad fills on purpose. I'll put a trade in on option strat sometimes and be able to do it a little better in real life. Anyway, that wasn't the question. The question is, how do I know where the market maker's expected move is? And also the question is, I think Tom was asking, let's say earnings are Wednesday, the expected, so you just know what the expected move is till Friday. I don't know what the expected move is for the earnings report, and that's true. What I'm trying to play off of is the expected move for the end of the week. And that encompasses some volatility from the earnings report, no doubt. Okay, so there's several ways to do it. I mean, here's the old fashioned, here's the way I learned how to do it from Tom Sosnoff 10 years ago. You look up on Tasty Trade over here on the right, it shows you the IV, it's 220. Then it shows you how many points on either side. It's 26 points either way. That's the range. That's the market maker expected move for the end of the week. You go out in one more week and it's only 28 points. It's only 2 points more. And you look at the IV, it's less. Well, why is that? It's because earnings are in this week. You can also see earnings are in this week because of the E. That gives option traders an opportunity. I know you guys know this, but I'm just trying to refresh. So we want to key off of this level right here. So the market maker expected move is actually 225. Okay. What I'm doing when I use option strat, I'm using a shortcut. Let's do it right here. Bull put spread. I'm using one standard deviation, which is not really the market maker expected move. It's a teeny bit further. I know that in my head, but it's still, hopefully I'll get the idea of the strategy across. So the market maker expected move on MongoDB, forget, it doesn't matter the strategy. It's the same, is 235. So how many points up is that? We're at 195 right now. So that's 40 points. Wow. So yeah, it's a little bit further because remember it's 26 in either direction. And here's a way to look at it graphically. The graphical way to look at it is they put this brown bar right here where the market maker expected move is. So they're saying 175 to call it 230. Well, 175 to 230. This one, look where it sits, 234, 166. It's close enough for me. Anyway, so but the But so that's when I say market maker expected move on option strat, I use one standard deviation, but it generally equates to tasty trade. All right. But real quick, and I want to show you, well, look at this. Look at this real quick. Look, here's Max's 3-leg risk reversal for the past 2 years on Apple. See how you like these results. This is the reason I do this trade. It's and I know a lot of you guys know this, but it's to try to sell premium, generate an income, a yield, and a buffer, just like I know I should. At the same time, get some exposure to the upside in a smart way. Well, I've tested it all different ways. I've stayed up multiple nights at 3 o'clock in the morning. I haven't found a better way to do it than selling puts to buy calls, but some manner of that, some variation of that. Call it a ratio diagonal. You can calendarize it, but that's what it comes down to. In any event, but look at this on Apple. Just over the past 2 years, buy and hold is flat, but running the option risk reversal strategy, you did have a gigantic drawdown, but you made 87% on instead of 13%. Okay, but the only reason you would do something like this, my strategy is designed to make an income, and you make $90 a trade, and you hold on to about a third of that on average. It cost about $3,300 to put this trade on, and it generated $9,000 in yield over 2 years. Heck yeah! So that's why I'm obsessed with these trades. They test really well. I'm gonna show one other thing. I'm gonna try to prove the point one other way. Then we'll look at whatever you guys want to. So let's just look at SPX because it's just fast and I just want to show this point here. Just selling puts. We'll just use a single day put. This is just selling an at the money put same day. And we'll go back 5 years. How's everybody doing today? Everyone have a good day? Market's boring, but it's boring in the right direction. A boring grind up. Remember what was it, 2017 or 2018? There was parts of 2018 or 29 where we got into just kind of a boring low vol melt up. That'd be fine if we got into one of those again. That'd be fine with me. I just ran this test a little bit ago, so I thought it would still be in cash, and it is. That was actually pretty fast. But okay, so here's the point I wanted to make. The orange line is the put selling strategy. The white line is just buy and hold. They both did fine. The orange line made 26% over 5 years. The white line, buy and hold, did better. It made about triple. But why would we ever just sell puts? Because it's for the income. We made $600 or we made $1,900 a trade and held on to about a third of it. So that's pretty good. It's a retirement income, right? But the problem is the low total return, right? So the solution is just a real simple solution right there. You're selling one put. How about you buy one call, otherwise known as a combo or a risk reversal? Like I said, I've stayed up multiple nights till late in the night. I've used different back testers, but mainly this one, and I haven't found anything or all of the better testing risk reverse reward is some variation on selling puts to buy calls. It could be in a different manner, but anyway, all right. I just wanted to show that. I thought I'm real interested in that. So this you're going to be surprised at how much better, or maybe not, at how much better the 5-year performance is. We'll look. Of course, we won't have as much income, will we? Right? But we'll look at that too. Drawdown's a lot less, I think. Yeah, drawdown was less. Yeah, so look at this. We still didn't do as well as buy and hold, but we did better. We competed better, less decay, less erosion, less whatever you want to call it, less underperformance. Average profit per trade, it's just better. It's better than the other plan. And generally, at least in recent history. It doesn't mean these trades will continue to be, but that's why I just want to explain why I was obsessed with it. Now your average premium is only $46, but you hold on to triple that much. Don't bring as much premium. But the way, of course, to juice this trade is you make this a 25, and then you get two of these. I won't bore you, but then you can outperform the SPY. And why hasn't a fund done this yet? Something like this, I don't know. Maybe we can ask Jay tomorrow. All right, guys, what do you guys want to talk about? That was just for one person. That was for Tom. I just wanted, but it could be for all of you guys. My theory of the three leg is I'm willing to take on the risk that it goes super high. So I buy that out one standard deviation or out market maker expected move. Call it market maker expected move plus a strike or two. Then the strategy buys that call. So I'm taking on that risk. I want that. I want if there's any extra, but at the same time, I'm selling out of the money puts and a few more of them. So I still have good profit in the middle. That's the whole idea. So anyway, and so what I've tried to do is I've tried to switch a defined risk trade. That's a defined risk reversal, right? That's all it is. That's what I'm trying to do. And then you can categorize it. You can ratio. You can turn it into a ratio, and you can add leverage and convexity. Anyway, thanks for being here, Scramble. My trading's not. Oh shit. Okay. Yeah. Thank you. Okay. My bad, guys. I appreciate it. Someone probably tried to call me too. Anyway, my bad. Thank you so much. You guys didn't miss it. You guys really. And I was just trying. That makes me upset. It's whatever. All I was looking at was the back tester. Gosh darn it. Gosh darn it. Anyway, do you guys have questions? Let me show you. Forget about the back tester. You don't have to do that again. The MongoDB trade. On the MongoDB trade, all I was trying to show, what Tom Sosnoff showed me. I'll do the thing really quick. You look over here, IV 220, and then 25. Really call it 26 points either way. So you can figure out what's that. Where's at the money is 26 points either way. If you're visual like I am, you can just open it up. And they put the brown bar where the expected move is. So if you want to play to the expected move, sell it or buy it or whatever, and I do say the market maker expected move, and I use it kind of interchangeably with the one standard deviation, but it isn't. One standard deviation is typically a strike or two further, but it's the same. But it's the same theory. I want in case it outperforms what the market makers think. If it goes outside of one standard deviation, I want to be in on some of it. Call it a little lotto ticket or whatever. That's all I was trying to show. So right there, this the market maker expected moves 175, but it's 170 at the one standard deviation. So then from there, we looked at MongoDB, and it doesn't matter what the trade is, but it's the same time frame. Look, you go out here to the one standard deviation, not the market maker expected move, but it's 234. Okay, and the market maker expected move is about 230, but the one standard deviation, 234. So 229 is the market maker expected move, and 234 is the one standard deviation. Close enough for government work, like I always say. For a while, you can also use the delta. It's also like the 20 or 18 delta. Lots of times is that call that I'm interested in buying. Now, Scramble lots of times will do a strangle, and he'll sell a put similar to what I do, and out of the money put, and then he'll also sell a call similar to the one I'm buying. And in fact, Scramble, you just came out pretty well on a CrowdStrike trade doing that same trade, I believe. I was going to congratulate you. I saw that in Discord. Anyway, so you guys can see the screen now, right? That's all I was showing. Hopefully you can see the screen now. Anyway, all right, guys. Well, sorry about that. Boring markets are better for cover call ETFs. Because you aren't just hating. The thing about a boring market is in a big up market, sometimes you're hating yourself, because no matter how good the cover call is, they all leave a little bit on the table. And so you're just going, man. But yeah, a sideways market, you can actually outperform the indexes, or a down market, you can outperform the indexes, but that's not what you want, because because your fund will pull back also, and it's just pull back less than the other ones. You guys know this, but anyway. But yeah, so scramble. Did you get what I was saying? Yeah, selling both sides goes well, goes great. Oh yeah. If there's no one way to do it, is what I was trying to. Scramble and I were talking the other day. My strategy is I'm trying to take on that risk on the wing. I want that risk on the wing, and he's selling that risk on the wing. But they're either way, to each his own. But mathematically his strategy is better. Most people say that mathematically there's no doubt his strategy is better, but I think my strategy is a tactical strategy. And I wanted to show one other thing about my strategy. I mean, then when I showed the back test, you guys couldn't see it, but I showed a 5-year back test of just selling the net the money put, and it made 20% where the market made 90%. Then I showed a 5-year back test of selling a 50 delta put and buying a 50 delta call. Well, you could still do it for a small premium, and you made like 60% where the market made 90%. You made about 2/3 of the return on the market and still made a small credit. What I really designed this for is a situation like this. Let's look at this back test. I ran this one earlier. So let's look right here. No, not American Airlines. Let's just look at the past 2-year in Apple. And this and what I programmed in before the show was a max 3-leg 50-25. Something like this. Hang on just a second. And I just wanted to show you, this is the kind of results I'm looking for. So right there, selling and at the money, this isn't really, it's just a close approximation. Selling and at the money put and buying a slightly out of the money put. So you have, so I'm getting income from the puts, but but anyway, then turning around and buying an out of the money and just buying one out of the money call. So it's kind of like half the upside, selling 2 puts to pay for 1 call. Very standard but just look at this on Apple. Let's see how this would have done. I think I have it on the wrong. Hang on a second. I have it on the wrong time frame. I don't want to do it every day. Sorry about that. Okay, in the 5-day time frame, just one trade on at a time. So it's basically like having stock for 5 days at a time synthetically. I've showed you guys the 3-leg a million times, but so let's just look at Apple over the past 2 years. You have downside, but you also preserve your upside. So let's see. Well, it did about the same. But you made a premium. So anyway, all right, guys, that's all I wanted to show on that stuff. Howdy, Michael. How are you doing out there? Any thoughts on BBAI? Well, I'd be happy to look at it real quick. Do you guys have any thoughts on BBAI? I'd be happy to look at it real quick. There's not much going on in the market. I mean, it looks like it's good, but it's melting up. Big Bear AI Holdings. Yeah. Unless it does an option strategy, I mean, it's just another stock to me. What do you guys think about this? Is it a fund of funds or something? I'm trying to look. It's running slow. Trying to look at the biggest holdings, Russell Index. Here's all the places it's held by. Of course, it's in all the indexes. It looks like it's on the Russell. It's like just an AI company, right? All right. Heck yeah, who knows? Who knows? The person to ask about that is in Discord. You're in our Discord, Michael, aren't you? What are you saying with the lawsuit and things going on? I'm thinking it might be a good place to buy. Really similar. Did you guys hear about Palantir? They've been in the news a bunch lately. Anyway, yeah, I've heard of Big Bear AI somewhere. Somebody's mentioned before. All right, let's see what's going on in the market. Closing on the highs, and that looks like we're going to do is always a good sign. Checking back and rejecting lower prices a couple of times is awesome. When this one was probably to check, maybe checking back to this prior. Sometimes it checks the prior POC and makes, I don't know, and traps there or whatever. That's what they say anyway. So there was that. I was looking at how much different Bitcoin's distribution looks in the same time frame. Now, Bitcoin trades 24 hours, okay, but Bitcoin futures don't. So look at this, how much ahead, I guess you could say maybe I think it looks like it's ahead, and it's not a good sign for the market if Bitcoin's leading the market. Looking at this. So this is CME. So I would assume anyway that CME is not going to trade Bitcoin on the weekends. Okay, so let's kind of, and this is on a 30-minute chart. We can just kind of look at the distribution of outcome. And let me zoom out a little bit. All right, I guess not too much different than NASDAQ, but it's just such a risk-on indicator. Just look where how much it's same. Just there's a big, in other words, there's a big gap where a lot of people miss getting on the bus on the NASDAQ. And it's already dipped back in there. It hasn't got all the way back here, but man, that was insane. They call that a breakaway gap or whatever, but that's insane. It just looks like NASDAQ was late to the party. By the time that happened, Bitcoin had already, you guys get the picture. Some people, then people were saying a few weeks ago they decoupled and stuff. Anyway, all right, guys. Well, sorry I didn't share my screen. Let's see what else I have. Look at this model portfolio is. This time tomorrow, my interview with Jay will be over. I have some questions written out. We can talk about them. If you guys have any suggestions, I'll read you my questions. So far, you can get a sneak preview if you want. See, this is pretty good. Look, I'm up 49 bips. SPY's down. I don't have the 60-40 calculated anymore. I should, because that's a better comparison than the SPY, but not as of yet. So YQQQ was the only major component that was down. The GDXY was even up a little bit, as was TLTW. Misty pulled back a little bit. I have just a tiny amount of Misty. It's amazing. It's costing me 2 basis points. It must be a pretty big move. What did they? Anyway. We'll look at Misty. We haven't looked at Misty. All right, so here we have micro strategies. We never really look at these on, as far as trading like this. But anyway, I don't really think these trade off technicals so much because these are so dependent on the outcome of what Jay's traders are doing. And everyone watches the trades. And I think that's so. Anyway, that's why I don't look at these that much. But this looks fine. I mean, this isn't down that much or at all. Yeah, it's down 1.11%. I guess I have like 5% allocation or something, or it's just I have a small allocation just left over because I was in a hurry. But now I wish I never would have sold it, of course. Anyway, I can always get more. Commissions are free. But anyway, so there we go. Check in on the model portfolio. So now let's check in on the buffer report or something else. Or I'll just talk with you guys. This isn't much. My computer's running that poorly. Michael, what are you saying? You sold up all yield max funds except for Misty and Platey, whatever. Move the money away from what I sold into those two. So you sold, you took profits or losses, whatever. You took your money off the yield max table and piled it into Misty and Platey. So anyway, you're just going in. How have those been for you? Did you? I guess Misty and Platey have been pretty good, right? That it is true. The ones that were like, AMD and NVDY and the old school ones, maybe not JP Morgan, but a lot of the old tech ones, AMD and stuff, just were terrible for a while. I'm with you on that, but yeah, not Misty snapped right back, and Platey, Palty, whatever, just never stops going. All right, so I have no freaking idea why it won't just open the screen. I just want to see this screen. All right, so it finally opened it. I wish I would have been sharing the screen off the get-go. I was so excited about showing that on Tasty Trade, the market maker's expected move is substantially the same thing as the one standard deviation. All right. Well, let's just look. We'll just look at these. Let's start with the old Alti. See how it looks. All right, there we have ULTY. Well, that looks pretty dang good, doesn't it? We'll take that. Up 73 bips. Reddit doing well. What is MP? Okay, now I'm going to have to weave over into the MP lane. And I never did look into this wild. It's only 1 day old. Wilder Hill Clean Energy. Clean energy is cool. I'm a big Green New Deal supporter. I donate to AOC. I send money to I like all the big liberals. And so I'm into that. I'm into the Green New Deal and stuff. Now I'm just joking. I'm not really, but I'm saying I am into clean energy to the extent that it can help Texas. We're so oil centric down here. Or gas. Anyway, I will look into that. All right. What in the heck is MP? MP. Materials Corporation. That sounds very basic and just infrastructure-y. You got to love a good infrastructure play. No dividend. Lots of cash, $4 cash per share. I guess lots of cash. Yeah, it's $24 $4 cash per share. So high price earnings, I guess, price to sales. Heck, you stock hounds come evaluate this stuff. I don't know. I'm a bottom line guy. I look at the performance year to date, 57%. That's wonderful. Insiders own 26%. Institutions own 69%. You can go down here. Sometimes you can see who the institutions are on the bottom right down here. This is interesting to do on the Yield Max funds. But anyway, yeah, BlackRock owns 9% of it. Hancock Property, probably a REIT, owns 8%. Vanguard Group, State Street. You guys get the idea. So that's what MP is. I'm sorry, it's my computers. I don't know what it is. The Wi-Fi extender's right here, so it's not the Wi-Fi. Everything's good in the neighborhood. They got all the power poles back up and everything. We have a main street that goes through the neighborhood that sits out kind of on a plateau, and it got like 20 or 40, 23 poles in a row, like at the top, just snapped in half. And they were taking power lines across the neighborhood. But some of them also had infrastructure for internet, and oh my gosh, such a disaster. Okay, so anyway, okay. All right, so let's see what else. So that's MP. Well, anyway, that looks like a good pick, right? I like that. Mara looks good. Baba's looking good. ASTS up 13%. Holy cow. I mean, that's awesome, right? That is awesome. All right, so now let's check in on LFGY. There we have LFGY. Well, that looks good. It was up about 0.5%. Average stock was up about 3 times as much. Left some on the table. Clean Spark. I mean, you know, these things are on fire. There's Mara. Anyway, okay, well, great job. GPTY I like because I'm boring. I like boring companies, but those boring companies didn't help me out, did they? Like AMDY and NVDY. I picked the darn top on those, or on those, you know, supposedly blue chip. I'm not really boring's the wrong word, but blue chippy companies. Anyway, these are definitely blue chippy. I mean, you know, NVIDIA, ServiceNow, Microsoft, Marvell, Facebook, Google. It doesn't get bluer than this. I mean, so these are some good ones. Tesla's what's hard is today. Poor Elon, I guess, got on the wrong side of the politics. And anyway, hopefully that's just temporary. Let's look at Chippy here. I like Elon. He's an Austin boy. He's a transplant Texan, just like me. He got here 5 years after me, but anyway, okay. So Chippy, that's great. It's up 86 basis points. Average stock's up 1.6. That's just wonderful. Look at On Semiconductor up 6%. NXPI up 5.5. Marvell up 6%. That's wonderful. Why don't I have some of that? And the reason is because I think through ULTY and LFGY, I have enough exposure to those types of companies. I mean, they have some of those same types of, I don't know. Anyway, all right. So but that's the reason. But maybe someday. Maybe someday. So let's see what else we have to look at over here. Let's look at the index buffer report, see what's moving in index land. Wow, what's over here? Is this SEPI and GPTY? Wow. Wonder if they're copying each other. That may be, I have a question for Jay, and I was going to ask him, why is he copying Roundhill? And in this case, SEPI's not Roundhill, or is it? Or SEPI's Rex or something. But But anyway, I don't really think he's copied. He is copying Roundhill, but I don't really think he's copying on this one. But I mean, GPTY is copying Feppy, though. I think it's not Seppi, but Seppi's like Feppy. I don't know. Well, GPTY, look at that. Look at that bad boy. That's pretty good. GPTY's made back all of the, all of the shortfall. Anyway, today they just happen to be up the same amount. They do trade together, but a lot of these trade together. And for whatever reason, GPTY is kicking their butt. So I'm definitely not going to ask them about that. Let's talk about GPTY and Feppy. Aren't those basically the same companies? Uh-huh. There we have it. There we have it. That's what they do. They go pick another successful fund, or that's what funds do to them also. They find the strategy that's working and they make a variation on the strategy and then they put it up. Anyway, I'm all about it because I've always liked Feppy. If there wasn't a GPTY, I would probably have Feppy. I thought Feppy's a good one. Yeah, Feppy's a good one. All right, so let's see here. What else are we looking at? Let's look at the, let's keep looking at the old index buffer report, see what else is moving. VYLD, I made a video about that and I haven't talked about it since. But I remember I liked it. But now I'm drawing a blank on it. What was it? VYLD? Now it's totally not ringing a bell. Well, I love the inverse VIX short-term futures. I mean, yeah, I like that. So that's what it was. It was some type of, but they're doing it through a swap or something. So it's probably not that transparent, or through a note. Maybe this redeem, ETN, redeem. Yeah, ETN means electronically traded note, right? Goes out to 2045, but anyway, I guess I'd be curious, did they pay a yield? Yeah, that's what it was. It gives you exposure to short volatility, but no yield. So it's not and they have, I mean, it's bounced since the market bottomed. It bottomed, 21, it's at 24. I mean, it's doing all right, I guess, but anyway, we'll keep an eye on that one. I guess I'm impressed that it didn't get its clock cleaned in that pullback. That was like the fourth biggest VIX pullback ever. They announced in March. That's the worst time ever for short volatility fund to ever come out. And to be fair, though, they went from 26 points to 20 points or 21 points in they lost 5 points in a month. That's pretty bad. It's a 20% butt kicking. But all right, let's weave back over into this lane. But I'm happy to see a lot of outperformance. But the reason is because look at the SPY. The SPY was down 3 pennies today, 3 basis points. Nothing. NASDAQ. Oh, look over here. I forgot about Q up and Q down also. Let's check in on those real quick. I mean, I didn't forget about them. They're young. We need to get some more data on them. But we want what I'm looking for is to see if Q up can compete with TQQQ. And they do upside leverage, but they do it in a little bit of a different way. Man, this thing, I mean, so it looks like just basically this went from 26 to 19. It dropped 5 points the same time frame, just like, so you lost 20% right there. But if you held through that, you're doing pretty well right now. Look at some of these up days. Look at this day. Holy cow. How did they do this exactly? I'm trying to remember. They do like TQQQ is triple leverage through triple leverage daily results These guys do it different somehow. And depending on the path, that's what how path dependency works, but depending on the path, they can come out, they can make more or not. They had a big redeem though. Look at this. Somebody said, I'll take my $1.8 million back. Thank you very much. They only had 2.5 at the top under management. Somebody pulled 1.8 out. Now they're sitting down here with $250,000, which is probably the minimum they need to even have a fund. That's probably the founder's money or maybe the market maker's money. But yeah, wow. Well, let's see if Q Down's doing any better. I don't know if you guys remember seeing my video about this, but it's just they just had a different variation on the strategy. Now, Q Down is shedding, Q Down has dropped from 36 to 18, dropped half its value in the market. It's the way leverage works in the market run up. So, okay, well, that's fine. I'd expect that. Same thing. People pulled money out of Q Down. Somebody took 2.9 out and said, I'll take my money back. And now it just has about $250,000. Well, I'm sorry to see that. Okay. We'll weave back over another lane. You guys may not be as interested in that as I was, but I'm always pulling for option, pulling for leverage. That would be awesome if that they need to come out with a smarter leverage than TQQQ. And I'm sure they will, or that's supposed to be one. And there's other ideas also. What about these ones that are leveraged? We'll talk to Jay about them tomorrow. That are just leveraged to like 20%. But then they also pay you a yield in addition. That might be they're too new to tell, but that might be something that could be interesting. But anyway, everything's looking good as far as on here goes. Look at TLGW. My gosh. Remember a few weeks ago I said I was thinking about selling that, but I didn't. But I'm sure thinking about it. That thing is a dog. That is a dog. Look at that. Oh my gosh. Does pay a 17% trailing 12-month yield, though. It's about that dividend. And it's also about that inverse to the market. Somewhat inverse, somewhat less correlated to the market action. All right, guys. I don't think I have anything more to ramble about. Maybe some option trades. It's too late. We could maybe look at how some of them are doing. But anyway, let's see what you guys are talking about. You like Elon because he thinks outside the yeah, I do too. I like him a lot. I was glad when he moved to Texas. Anyway, but yeah, he's a perfect Texan, and his brother is too. His brother even looks like a Texan. Well, because they're both tall dudes, but his brother wears a big cowboy hat, and anyway. His brother's opening like a 4-star restaurant at the top of the tallest tower. They just built a tall tower in downtown Austin. It's going to be, I think, residential, retail. All three of them, just like everything has to be nowadays. It's probably a hotel. No telling, but it's some big fancy thing. But at the top of it, they're going to have this restaurant. I forget the name of it, but I think he also has one in Chicago and maybe Vail or Aspen or somewhere. But yeah, he does think outside the box. Okay, I'm sorry I haven't looked into Wild yet. Exactly. Wild is apparently wrong because I was thinking, Marcus, there's no way someone would be telling me about that because I'm not interested in green energy, and neither are you. I mean, or whatever. I mean, I'm interested in it, but yeah, I shouldn't say it like that. Wow, ETF prospect. Sometimes you type it like that, the name ETF and then prospectus, and yes, there you go. Vista shares 5 hours ago. Perfect. And that's perfect. It's timely because they're talking about leverage, and we were talking about leverage. Heck yes. Now, this is right up my alley. Maybe we need to get, Vista shares animal spirits. 2X daily strategy ETF. When did this start trading? So look at this. Right now they have Facebook, Misty or MicroStrategies, Mr. Palantir, SMCI, and Tesla. Now that's a lineup right there. That's the freaking murderer's row right there for nowadays anyway. That's, remember when you used to have FANG? That's modern FANG, I guess. Well, I guess wild is the new FANG, right? So what is Animal Spirits? Animal Spirits investing approach to seeking capitalize on the behavioral and psychological factors that drive investors towards market trends. Wild targets companies that gather outside. Oh, so they're just going for Wild targets companies that garner outside attention from traders. They probably look at social networks. I mean, that's all anyone tweets about is these companies, Palantir, Tesla, whatever. All right. Reflecting the influence of investor optimism and momentum, key elements of seeking, or all anyone talks about is Mr. But they also talk about Tesla and Palantir a bunch. Key elements of seeking investment returns in the market. How to invest. I wonder how actively they'll switch these, because that's the thing about trends. A year from now, it could be something else. And a year ago, it was definitely something else. I mean, but I like these. I love these strategies. But anyway, this is cool. So ETF objective. So they see capital appreciation. It's no income. So all they're doing is they're going for 2x the results of these things, and it's 2x the daily returns. So I mean, yeah, that's fine. That'll be awesome. That will be awesome. Ticker's wild. Bloomberg index. I'll get all this strained out in the spreadsheet tonight. But yeah, this is awesome. Heck yeah. Good call. I knew you wouldn't be sending me something, or no one would be sending me something about some green energy fund. I mean, are you going to ask me about a DEI fund? There's this new fund that's got 5-star DEI, ESG, and green energy rated. Like I say, and I'm for all of those things individually, but not really as political slogans or virtue signaling. Anyway, all right. The financial business getting better about not doing that anymore. Anyway, but they've been bad about the virtue signaling for years. All right, guys, I'll stop rambling. What do you guys want to talk about? We've had some good picks in Discord lately. I highly encourage people to get to our Discord. So yes, wild looks really interesting. So it's going to be, I would think of it. You know what looks interesting to me? I said I'm going to stop rambling, but actually, let's keep rambling. What looks interesting to me? What about Maggie, M-A-G-Y? What about MAGS? Or what about, aren't those similar concepts to wild? Okay, well, obviously one of these is new, but let's look at this one. I saw this one the other day. ETF prospectus. Okay, so this is the Magnificent Seven. So this is last generation's hot stocks. This is not going to have Palantir in it, and it's going to have all the ones that cost me money back in December and January. But but anyway, so what's the deal? So this one is the purpose of the fund is okay, but this one is, I like this one though, because it's current income. It's an income fund. So if they just do cover calls on the Magnificent Seven. So something like that I guess you would compare that to YMAG, of course. Maybe that's a good question for Jay. I don't know what's going on there. Did one of them change their names or something? Did Maggie switch to Mags or something? There's something like that. Well, old Mags is now we got to see what Mags is. So yeah, so Mags is it's the same thing, I guess. I thought one of them was for a yield. I thought Maggie with the Y was for a yield, and Mags was just upside. Yeah, and that's true. Mags is just for upside. It's not for a yield. Mags is you get stock. Okay, here's what I'm saying. So Mags is going to compare to Wild, kind of. except Wild gets twice upside. But in the sense, they're both just upside funds, no yield. Principal investment strategy. They seek to achieve their strategy through exposure to companies to the extent that I'm just trying to see if they're using leverage or anything, or no, it just couldn't be any more basic. Okay. Oh, they switch monthly. Okay. I'd be interested in that. That's a great idea. That's a great idea. So then now we're comparing more to like a feed and 5e because they switch monthly also. That's awesome. Good information, Marcus. That is great information. Yeah, I mean, SPMO is a good one too. I've looked at that before. It's just the momentum stocks in the S&P 500. But yeah, it's like it, except it's more concentrated, right? Because it's only 5 stocks. And the SPMO is probably 20 stocks, right? I mean, I've looked at that a long time ago. It concentrates the momentum stock, but rotates monthly and double leverage. Yeah, no, that's awesome. That's awesome. That is awesome. That is a good tip. Yeah, like I said, really sorry I wasn't sharing the screen. Let's look at option strat, see what's up in option strat, see if any of these trades are doing anything. But we can look at another. I mean, we'll look at another example, and I'll show that I can start showing trades in Tasty Trade if it helps people out. And the Tasty Trade is more accurate. Their market maker expected move is probably really what I should be aiming for more than the one standard deviation. It's we can do this, or I can read you my questions for Jay and see if you guys have any input on it. Maybe we'll do both. Let's see what's going on here. Holy cow, what is going on with this thing? Dude, I should just quit doing YouTube and just keep doing Discord and just make all the trades that the stock bros talk about in my room. My gosh. I mean, it's an option trade, but it's a stock bro trade. Holy cow, what a great trade. We did this, like we simulated this like a few hours ago. And remember, I didn't do it because I didn't want to lose $3,600. Well, how stupid do I feel now? I mean, it's up. Anyway, but I mean, you'd have to have hindsight. But and this is supposed to make a big move by the end of the week. This is peanuts, supposedly. The strategy on this is hopefully it makes a big move, or if it doesn't make a big move, hopefully it doesn't run through the buffer, which is about 5.3%. Okay, but I can show this also as in the context of the market maker expected move. I want to buy the risk. I want to take on the risk that goes beyond that strike. So I go out one standard deviation to set the strike. You can see right there on option strat, the strike's 450. And also they make it work out where it's right above it's supposed to be right above the probability cone where it's supposed to be. Okay, so they're showing on app market maker expected move, and not really, it doesn't have to be for earnings, but you can just look for an expiration cycle. So let's go. APP, little app loving. I bet those founders are loving life. I mean, can you imagine any of these guys that founded any of these AI companies? Lots of money. Okay, but so just to reiterate the lesson from when I wasn't sharing the screen, if we want to look at the expected move, and this isn't an earnings stock, and it doesn't have to be an earnings stock. This is a stock that has a binary event coming up, or say a rumor. It could be like a takeover stock. The rumor is that the S&P adds new people at the end of the week or something, and this one might be included. Well, so look over here at the IV. It's 115 for this week. For next week, it's only 90. The week after that, it's 79, then 77, then 69. It's supposed to slope down a little bit, but anyway, all the extra volatility in the front end usually indicates something like earnings or something like a rumor, takeover, binary event or something. So that's what we see here. So how far do the market makers think it'll move? Right over here to the right, it says 2750. That's how far the market makers think it'll move in either direction. And so 420, you can just add that number, subtract the number from 420, and you get, what is that, 387.50 it looks like, and then 445 just about. Okay. My trade, I just wanted to take on the extra risk above one standard deviation. So I'm probably using the 450 strike or the 455, or really I should be using the 450. But anyway, but like I was saying, and the only reason, and we could go ahead and set up the whole trade in here, but it just doesn't, there's not an easy way to try to copy and paste it and show it to you guys. I could copy and paste a picture of it, but when we do it in option strat, then we have a database of it and we could track it. So anyway, but also another way to look at it, if you don't have option strat, it's also generally the option I usually look to buy on my 3-leg risk reversals is 18 or 20 delta, something like that, which is the 450 or 455 strike. So that means 80% of the time this option will be a waste. I'm just trying to get the extra money. The 20% of the time this thing comes into play is what I'm doing by buying that. All right. So, but that trade, that's something else. Let's look. We can even look. Here's a little option strat's not great. You kind of, but I mean, you click on the wheel, you click on it once, and then it highlights, and you can see how it moved during the day and what time it started taking off. It was up. This trade was up 33% by 106. I mean, it's just, All right. So neutral to bullish shotted earnings on MongoDB. They had earnings after the bell. We don't know yet because the market hasn't had a time to react yet. That was just how much they were down before or after the bell. Dollar Tree's not working out. The bearish crowd strike trades are working out. The bullish crowd strike trades are not working out. I like to congratulate Scramble. His trade worked out because he sold a put and he sold a call, and he's already taken his off for a profit. This one is, and I told everyone not to do it in real life because it's too expensive. But anyway, this one's, not looking good now. We'll see. The market could rally, but that one is not looking good. But the upshot is, I did say it's cheaper to do bearish trades. You could just put on something like, something like this, and then just play for bearish earnings. Anyway, those all hit. So, all right. Crowds. I guess that's all we've been following. Anything from that is Dollar General. Isn't that from last week or something? Bullish DocuSign. That's just a leftover one from last week, I think. Let's go over here and see how some of these exponential ideas are doing. Yeah, this one right here, TMDX. Look at this, baby. When this is back from April. When he first started talking about it, or not when he first started about it in Discord, but one of our Discord members likes this, and so I've made a synthetic stock play. And man, what a great looking trade. There's a chance this could go to 200 or something, I think I heard. Anyway, TMDX. I should have done this app 11 one. Why didn't I do this app 11 one? That's the story of my life. All right, yeah, scramble. We're going to look at Broadcom tomorrow, see what we can do. Anything bullish the week of April 5th, of course, rocketed. Yeah, good point. Good point, yeah. All right, guys, I'm trying to think if there's anything else we need. Oh, yeah, I was going to show you. I was going to, here's questions for Jay so far. Let's talk about the birth of an ETF from a strategy standpoint. How does that happen? How much back testing do you require before launching a ticker? Is there anything else that you have filed for that we might be interested in? What about a buffer / income ETF? I don't guess you can talk about the lightning spread ETF yet, question mark. Now let's talk performance. How have the target 12s been doing for you? Are you concerned that something like Biggie doesn't perform much better, if at all, than a host of other ETFs in the same yield range that have less of expense ratio? Have you thought about maybe becoming more competitive because of the lower yield with those? Let's talk swaps. Let's talk leverage. I've seen filings about the single stock ETFs with swaps and leverage. Would you care to comment? Are the swaps going to stop the NAV erosion? How's that going to work? Is it going to be the same? What's the advantage for you? What's the disadvantage? Then I want to talk to them about leverage and some other things. But anyway, that's where I was starting with. Those were kind of some of the things on my mind. If you guys have any ideas, of course, you put them in Discord, whatever. Hey, SB, glad to see you here. Glad to see Mr. SB here. We were just talking about my questions for Jay. Anyway, let me see how my model portfolio finished out for the day. It's 15 minutes behind. Look at that. Max's model up 49 bips. You got to love that. GPTY made me 28 bips. ULTY made me 12 bips. What a great freaking day. LFGY made money. Misty, all right, cost a little bit, whatever. YSPY doing well. TLTW killing it today even. GDXY looking good. And, of course, the hedge part of it. Something has to go down. But we'll take that. SPY flat up 50 cents. This is my own high yield fund, or it's for my brother-in-law. But I mean, it's because we're running multiple strategies, some bullish, some bearish. The whole idea is it should hopefully be self-sustaining and should last for a good long time through bullish markets and bearish markets. But we'll see. We shall see. That's the idea anyway. Okay, so let's see if I have any more new tech. Let's maybe look at the max factor, see if the max factor straightened out. I need to get the AI. I got a new AI assistant. I need to get the AI assistant on the max factor. Trying to remember where the retirement simulator is. We need to look at some high yield technical analysis. All right, let's see how these things are working out. Looks like some of them are still loading. Maybe we'll get lucky and there won't be too many of them. Maybe we'll get lucky here. Let's see who's doing the best. Oh. All right, I'll work on that sheet. I'm sorry. It's just there's too many that aren't working right now. I just need to migrate that to my other account. The other account has 1 terabyte of storage. There's just not enough storage in that account. All right, that sheet's dead. I'm never going to show that sheet again. So look at this thing. I'm real impressed. I figured out how to do this. I used to have to go down. These are the yield max trades. And then I put this column SS and long out here manually, then manually totaled them up, and then manually figured how much premium they got. And then at some later point had to figure in the assets under management. Anyway, put it all together. Well, now, last night I was up till 2, but look what I got the AI to do. So the AI will go get it every night at 6. It puts in that same column that I put in auto-freaking-matically. It parses the dates of these option trades, which is another story. But anyway, then it shows you right over here. So right here, 1.9 million. NVDY brought in 1.9 million yesterday. So now all we have to figure out is NVDY's assets under management, which is right about $1 billion. So that's 1.9% or something, right? And then we can, then from there, annualize it, graph it, and the AI can send me a report every day. But I made all this where it used to take me 2 hours to do this. And now it's just, I mean, it's taken me a long time to code it, but once I code it, it'll do it automatically every day. And you guys don't know how proud I am of this and how much easier this is going to make our life. And it's going to give me more time, because what you guys really care about and what's really fun is to look at the ULTY trades. What are they actually doing? What do they, where do they get exercised? So ULTY is playing a little Broadcom. They got a little Broadcom because you guys were just talking about Broadcom in the comments. Does Broadcom have earnings coming up, right? Or they already had them? The earnings are Thursday, right? Yeah. It's them and somebody else. I just want to make sure. Yeah, okay. And Lululemon. Lululemon, of course. And DocuSign. DocuSign's the one that I'm in and enthusiastic about. But yeah, hopefully we'll do all right on Thursday. But anyway, okay, so back to here. But if it would just give me a report and we can know the premium and all that stuff, that would be great. But I would like to spend more time, because the computer can't go through here and evaluate the option trades. I mean, it can total them and stuff and make my life easier, but we'll try to see what they're doing here. But these guys were on this Rigetti the whole time. Let's check into this. Let's weave over into the Rigetti lane. Rigetti computing. It's just like it's a meme stock kind of, not really a meme stock. Gosh, you got to be kidding me. Come on. Look at this performance for the year, 1,000%. Holy cow. Anyway, hell of, huge IV, quantum computing. They've been in it for a while. Anyway, hopefully the AI will be able to handle the stuff I don't like to do, so we have more time to do the stuff I do like to do, and I'll be able to give you guys better service. But this untitled spreadsheet, I need to title it. But once I get this working, I'll be able to throw away all my other ones. Now that I know how to do this, I'll be able to make the buffer report and those other reports that you guys like come out right. And I'm even trying to figure out how to publish them to Discord. There's no reason that we should, or why can't they just email them to me? Then I can publish them or something. I don't know. Anyway, I'm sure we can. So I'm in the midst of figuring that out. Scramble, you did some trades in Rigetti. I just noticed I just scanned for the best covered call ideas sometimes on barchart.com, and they just show you the freaking outrageous IV monsters, and that's really lots of times about half of those stocks are the ones that are in ULTY. Well, and that's where I saw Rigetti, but you moved into IONQ. That isn't that one in ULTY as well. Let's flip back over there. Okay, ULTY. INOQ. Well, this doesn't show you the positions. It just shows you the trades for the day. So they may still have it It may just not have traded. But they did get some stock exercised up here. Right here, they lost 100,000 shares or something. Well, it's 112. We can usually tell what it is by what else is around 112. You can go through here by strike prices or anyway, but it's also a QSIP number. Now that I have AI, I can have AI just take that QSIP number and put the name of the stock in there. I need to do some work on this. Now I'm just torn because I finally forgot AI working, but I need to concentrate on my interview with Jay. I need to concentrate on those questions and try to make the interview the best I can. But I figure if I can start them off with 4 or 5 good questions, more kind of about options, stuff I like to talk about the strategy and about the decay and erosion and if we can, hedging and just different things like that. And then inevitably, people in the comments will ask them. They'll ask them. I don't have any questions in there about Misty because there'll be a million questions in the comments about Misty, right? So I'm just trying to get the conversation going the right way with 5 or 6, good questions. I like the question about Biggie. I'm gonna show a chart with Biggie and some of the competitors, and it's middle of the pack. I showed it against. There's 7 other funds, and it's like 4th. There's 3 better, 3 worse, but it has the highest. It has the highest expense ratio. So that's a legitimate question, and we can hit them on that. Because I even in my notes I asked it a little different. I said, look, something like if Biggie wasn't a target fund, we know from other yield max funds it would make 50 or 60%. That's about what the going rate is for something with those types of stocks. But it's a target fund, so it makes 12%. And then because I typed out a question, I said I get that the yield max ones you can justify, but maybe since you're just making about 1/3 of the yield, maybe charge 1/3 of the expense ratio. And of course, he's going to hate it and he's going to say no. But anyway, I was trying to think of some interesting questions to ask him. If you guys have any advice, be sure to hit me up in Discord. I'm always there or try to be there. The CoreWeave premium is crazy high with it running up so much. This is the crazy thing that I didn't understand. I did pretty soon after I started following these. The stuff about that volatility goes up when the market drops, that's only true on indexes. That's a saving grace on index, but it's kind of sometimes it's not. It can be true on single stocks, but lots of times on single stocks it's the opposite. So so I think it's good to have some exposure to single stocks because they have more of an outperformance on the upside chance than indexes. But indexes are good as well because they create more of a buffer in a bad market. But I mean, it is true. We saw it's Tesla when I first noticed it. One time back, I don't know, a year ago, Tesla rallied and its vol doubled at the same time it rallied. And that, it's the best of both worlds. It's convexity. That's how you get convexity. Usually happens when people talk about option convexity. Usually comes from buying puts. When you buy an out of the money put, if you do it before the market crashes, if the market does crash, you get a double, or let's say you buy an at the money put. Forget about out of the money put. If you buy an at the money put and you do it the day before the market drops 5%, well, you get a move, you get a bump in that put because of the 5% move, the delta effect. But because volatility goes up on puts, especially, and because you bought that put and you took that risk on, you're warehousing that risk. After it drops, that puts, that's how convexity was first explained to me. It's like a tailwind. You're going in the same way. Volatility is giving your asset a boost at the same time the market's dropping. At the same time the market's dropping. Well, anyway, there's upside convexity in some of these high yielders like Misty. I mean, and it still doesn't perform as well as the parent, and it's not going to, and whatever, because there's no free money. Or it doesn't, at least we haven't found it yet. I'm looking for it. But you know what I mean? That's the thing about the single stocks ones that make them so attractive is that. So, but for me though, I just found out I loved NVDY. It's the GOAT. I watched Rod's show every day for a year. You know, and NVDY was one of the first ones I bought. I was so excited about that one. Also Fibby, and I got all the good ones. But they have a large amount of risk in a pullback. So I think it's great to use the single stock ones, but maybe to hedge it. And there's great ways to do that with Coinbase and with Tesla and Crash. And I'm trying to do that with YQQQ and, you know, so, but yeah, I love the idea that the single stocks are able to appreciate at the same time the NAV goes up, meaning you can buy out of the money calls sometimes. The market will get a rally and it'll feed on itself, and you'll have the convexity that way. That doesn't happen in indexes. It happens the opposite way in indexes, is what I was trying to explain. Hopefully I described that right. Scramble knows more than me, but he might disagree, or put your 2 cents in there if you know, if I got that wrong or whatever, or any of you can. I mean, like I always say, there's no casual max watchers. You guys are all option traders, or you wouldn't be watching the show. So you put this in Discord. Okay, this is good. What are the metrics he looks at that forces them to change the strategy within the fund? I was going to ask him something too along the same lines. But yeah, that's a better way to put it. I think that could go as like a follow-up on my first question. Or let's talk about the birds from a strategy standpoint. How much back testing do you have to do before launching the ticker? Then how about this? How poorly does a fund have to do to get a strategy change? What metrics do you look at? Or is there a metric? Because are you wondering why he hasn't done something with some fund or something? I mean, is it specific? All right, but that's a good decent follow up, and it also depends on how he responds. You know, lots of times we get off track. You know, and I feel bad. I have not been keeping up with Edgar, and I'm always surprised. I get blindsided by somebody in Discord will put something new that's really great up that they filed for, and I have no idea. And other than going and searching Edgar, and that's like a rabbit hole. So is there a better way I could ask this question? Is there anything you filed for that we might be interested in? In other words, I kind of want to ask specifically about the leverage and the swaps, but I kind of asked that later. Let's, you know, maybe he'll say, you know, or I know that a lot of you guys are really interested in the single stock leverage ones, right? Is there anything else that somebody has seen in Edgar that I haven't seen that I need to be aware of? Because I haven't been to Edgar in a month or two, and I used to have AI read it for me, but so Scramble, it's a broader question you can riff off of, because you can then delve. Yeah, okay, of course, I got it. Yeah, underperformers, outperformers versus competition. Okay, exactly. You're right. You're right. It's actually a follow up to that other question. Yeah. Is there a level of underperformance or something like that? Yeah, is kind of what I was thinking of. That triggers. Is there something that triggers it? So I'll just riff off of it, because they did a good job, I think. I mean, on ULTY, but did it come in? Maybe it or does it come from social media comments? Does he get tired of getting savaged? I mean, if I was these guys, dude, this is their life's work. And there's people that have no idea about anything, on Reddit especially, weighing in all the time and stuff. And when I met some of these guys last year, they have a good attitude about it. But I wonder sometimes if they get tired of getting their butt kicked in social media, and they make a change. I'll give you an example of one time I think they did. They took so much heat for splitting all the time. And so they used to tell us that they were scared of it going under 5 because they were getting delisted. Well, that was kind of a misnomer. Maybe on a single stock, that might be a problem, but they run $1 billion funds now. No one's going to delist them. The NASDAQ will give them a chance. But anyway, I like what they've done because it really, the splitting doesn't matter, but it also doesn't matter if you don't split. It's just math one way or the other. They got a lot of people upset though, because a lot of people don't understand that it doesn't matter. So that was one time where they gave in, I guess, for better or worse. I guess for better. I'm fine with it because it was kind of like a fake story to say we're scared about getting under 5 because, and getting delisted or something. That's not going to happen. That was kind of fear mongering, right? Anyway, all right. But is there anything else you filed for? So yeah, if there's anything from Edgar, let me know. And then I'm asking about the target 12 funds. That could be performance, but I'm also making a chart of just some of their. I'm going to go year to date on their 10 biggest funds and put that chart up. Anyway, but then I want him to explain swaps and leverage to me. I really don't understand why they don't just use. I like when they just use options. I don't get what's the advantage, But anyway, I'm going to let him. We'll see where that one goes. And then I want to talk to him a little bit about free money. I like to talk about free money, or that there's not really free money. I do think there's cheap money though, and lots of the guys in our Discord know where to find it or know how to make a little cheap money. What's he looking at in competing funds? Yeah, or is he looking? They were kind of proud about being first to market. They were the ones that invented some of the yield max strategy that just go crazy on yield. And they had the first to market advantage. They don't have first to market advantage on the single stock leverage, and they're playing catch up. That's really a good topic, Scrambler. That's something I want to hit on is and it's more of a sub. Let's talk performance. Let's talk about the arms race with Round Hill and others. But especially Round Hill. But I really want to talk about that, and I really want to talk about how is he happy with that? Is he or are you, whatever? Are you happy with SDTY? They put that in. That's the one I'm going to ask him. Is he embarrassed about copying? Because they copied the Round Hill strategy. And that's kind of what made me think about it, Scramble. I was reacting to your question because you were saying, do they look at other funds? And yes, they did. In Round Hill's case, they saw a fund that's doing really well, and they brought out the same thing. Are you happy with SDTY? And are you at all ashamed of yourself for ripping off? He could throw this right back to me because all the other funds are ripped off his strategies. But anyway, for ripping off Round Hill's strategy. But then, but seriously, then I do want to ask him because it looks like they trade almost within a penny of each other. I really want to ask him about that. I have some other follow-ups anyway. So I think that's a good line. That's a good line. So rephrased. Okay. What do you see that your competitors are doing well? That's a good one. Yeah. Let's talk about the arms race with Round Hill and others. what do you see that your competitors are doing well? And then that can lead into, are you happy with SDTY? That's the one that ripped off XDTE. Anyway, are you? I'll change that. Anyway. All right. Target 12. This is a good line of question. Really fits in with all the same lines of question. And then once we get to this point, if I can get through these questions, a million questions will come up about the stuff that you guys, the more direct stuff. I'm just trying to get the conversation started. All right. Do you think they'll have weekly leveraged funds? Yeah, I think they filed for that, but I'm embarrassed because I don't know, because I quit keeping up with Edgar. But didn't they file? Doesn't Yieldmax file for weekly 20 to 25% leverage? I think somebody's shown that to me before. And Rex, doesn't Rex have? Rex filed for something recently too. I can barely keep up. That's why I'm really trying to get the max factor. I'm really trying to invent ways with data just to concentrate on the ones that are doing the best. There's like 100 of them we follow every day, but there's just more and more coming out every day. But it's a fun time. For sure. But yeah, do you think they'll have weekly leverage funds? That's kind of a follow-up question on, is there anything you filed for that we might be interested in? And then I can put maybe weekly leverage ETFs or something. What about a buffer income ETF? I don't guess you can tell. That's more something I want to ask him. Lightning spread. But anyway, that's a good subcategory in there. I'm probably just going to clean these notes up and send these notes to him. And then he'll be thinking about some of this stuff overnight also. And he might come with some, and especially when I send him the thing on Big E, he'll probably have some kind of retort. He'll say, well, heck, I don't know. We'll see, but we'll give him a chance to speak for himself. And to be fair, I think we're going to also mention, I was going to try to mention that, there was a couple of his that are not disappointing, that are the opposite of Big E, Big Y, that they're actually doing better than some of the cheaper ones. And let's look into that really quick. Let's see what that was. I'm going to get into Discord. I'm going to look at Discord really quick and try to remember questions for Jay. Since we're talking about it right now, yeah, okay, we're going to ask that one. Okay. Yeah, ULTY and YBIT have turned around, but I wanted to show that. You said on the flip side of Big E, ULTY and YBIT have turned around their performance. Oh, okay, this year, very well in the newer fund. GPTY is performing better than, I didn't even know that, but that's awesome. That's awesome. GPTY is doing better than YMAG and YMAX. That's awesome. Now, GPTY has a downside hedge, so it probably shouldn't yield as much as YMAX or YMAG, but it should do a little bit better on the downside. Since we had a big pullback, that might explain why it was doing a little better. They run a Q put hedge, which is why I like them so much. Okay, so yeah, I'm just going to copy and paste that. I don't feel like typing it. I'll rephrase it in my own word. Big E, and then we'll say on the flip side, yeah. Okay, perfect. So, yeah, now I wanted to show you guys. Let's look at ULTY really, really fast. Let's see how they have been doing. We'll just do a year to date on ULTY. What should we compare ULTY with? It's tough to compare it. ULTY. Let's look at SVOL. I'm just fascinated by SVOL lately. So this is, let's make it year to date. All right. Heck yeah, ULTY. Heck yeah. Look at that. Look at this. Didn't go down as much. I mean, SVol's maybe not the best comparison, but I wonder if we could compare with the Qs. It may have gone down more than the Qs. I mean, but if it has buffer on the Qs, that would be really impressive. No, it doesn't have buffer on the Qs. So, well, over here, dividends not reinvested. It's about a tie. It's about a tie. The Qs are going to, the Qs snapped up a little bit faster because its upside isn't capped. But like I always say, the Qs paid 72 cents on a $500 over half a year, where ULTY paid $2 on $6 over half a year. They're not really half, but 40% of a year. Yeah, so great job, ULTY. And what was the other one that you said? ULTY and it was YBIT, wasn't it? Yeah, ULTY and I thought it was YBIT. Heck yeah, YBIT. Now, YBIT's not really a fair comparison to the Qs. We might compare YBIT to the Russell maybe because it's more, super more volatile, smaller companies. But yeah, heck yes, YBIT. I was looking at GPTY and I didn't realize GPTY was really beating. I love YMAX. It broke my heart to have to sell it. It's such a good, because you get all of them. I love all of them because they're coming out with new ones every day. Because I didn't buy Palti, but if I would have had YMAX, I would have had Palti through there. I mean, I'm fine with just getting a little bit of all of them. Yeah, you get some bad ones, but you get some good ones. After all, you're just going for the yield. You should have yield with a little bit less volatility. I will say this, though. YMAX protected capital on the downside better this year. GPTY bled off quite a bit of capital, especially considering it had put hedges. That's something I might mention to him. Look at that. It was down 25%, even with put hedges. Now, let's see here. Were they too far out of the money? They need to hire me to run the put hedging department. I'll come in and straighten them out and show them how to run a freaking put hedge. Or Scramble could do it. What in the heck? So you outperform the Qs on the way down? That's not supposed to happen when you have a put hedge on. Okay, well, that's a good question for them right there. Don't you guys think? Is that a fair question, Scramble? I mean, it's a pretty aggressive put hedge they have on. Why don't they just leave it off if they – anyway, the thing is they have concentrations. What he's going to tell me is we have concentration and we're more volatile than the NASDAQ. We should lead it on the way down by a little bit. Maybe is what he'll tell me because they only have 15 stocks. I don't know. Let's compare GPTY to YMAG. That's kind of a fair comparison. Or, as far as having less stocks. Okay, well, GPTY also led YMAG on the way down slightly. Now it's leading on the way up, though, which is great. Well, anyway, I like GPTY, but I'm going to ask him why it sucks so bad. I'm going to tell him that we're all going to sell our shares, and I'm just joking. All right, but I'll talk about him. So Scramble, no idea how SVol is working now. Doesn't make much sense to me. Yeah, they're doing some other stuff. I guess it's kind of discretionary now from the last time I kind of researched it. Boy, wouldn't it be great to try to get Mike Green on the station? Maybe if I do a good job on this Jay interview. I've done a report. I'm fascinated with one of Mike Green's funds, and it's his baby. So maybe if I could do a good report on that, maybe he'd come on to talk about that, and we could, because I would love that. I have a lot of option questions for him, but he's the J of that company. He's their head trader, so he could tell us all about SVol, even though that it's not SVol's not his product, but his product is this thing I'm trying to show you. It's something called his baby. You got to know what their baby is because you just got to know. I'm trying to find an open instance of FinViz. Here we go. His baby is called FIG, F-I-G, I believe. Now, What is it called? Simplify. I swear to God, it's called Fig. And it's his. It's anyway. It's his. It's a hedge fund. It's a hedge fund strategy. It's a multi-strat thing, and it's kind of his baby. Maybe I have it. Maybe it's Vig. It surely wouldn't be Vig. I mean, Vig means something in the hedge fund world or in the world of lots of stuff, but not. It's not a ticker. Anyway, well, before I ever get my green on, I got to find out what his signature fund is. I thought it was called Fig. But anyway, seriously, on Simplify, though, Simplify is heavy into the liquid alts. It's not just SVOL. They have a lot of futures-based strategies where they're doing futures yield strategies and futures. Anyway, but it doesn't have to be him. They go on. I've seen Mike on other guys that have 2,000 or 3,000 people. So he's gone on other small podcasts. Now, maybe they were his friend or something. I don't know. But anyway, maybe we'll get him on one day. Let's just get through this interview with Jay. But what I would really like to ask Mike about, I could ask Jay about it, but it's not Jay's product, so I don't want to waste time, is these barrier options. I thought I understood stuff, but I just cannot get a handle on the barrier options. Anyway, but that's that. Let's see how SBAR is doing. The product that uses him is called SBAR. It's from Simplify. Okay, Simplified Barrier Income ETF. And it's, I mean, I used AI and I think I understand it, but I'm just not sure. Anyway, but there's a different type of options that banks use and stuff, and it's called a barrier. And I think it may be similar to selling a put spread, but in reverse or something. I mean, all right. Well, anyway, all I care about is the bottom line. 3% year to date, 70 assets under management. Let's see if people are buying it. Not many. I mean, what is it? That's 30 million under management. They've had some positive. So the money's going into it. Okay. But it's totally opaque because they have this and they use these 3 barrier options. And if any, and they have a worst of clause where it's just a cluster for me. So anyway, I'll quit speculating on it, but maybe at some point in the future, somebody from Simplify would come on. Simplify has a lot of interesting funds. They have some good like Black Swan and tail risk stuff, and Mike Green's an expert in all that kind of stuff. So anyway, we'll try to get him on sometime. All right. Was I sharing the screen, or is this working, or what? I don't know why I'm not sharing the screen. Oh, there I am. All right. Well, all right, Max. I mean, all right, Scramble. You guys have a great day. And yeah, but it's not a hedge for volatility anymore. It's just a discretionary fund. All right, guys. You guys have a great day. I'll talk to you later. See you.